Okay, let's do this fucking shit.
get on with it. I know. Today is early. Just decided I need an extra little time this morning. Yeah! All right, welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance. With that being said, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. My name is Wayne. I'm a pip pirate. Arr. I spilled coffee all over the place. So good morning, pip pirates. So I need to start a little early today. Sorry about that. Just need a few more minutes throughout the day. Then I realize the only way to do it is get up earlier and start everything earlier. And anyways. So here we is, and here we shall be. We'll do some technical and fundamental analysis. Let me know if you have any questions about anything in particular. I aim to please, and I want to help, but ultimately you have to ask. Under the video, there are some links that I'd like to point you to. One is to my book, Strategic and Tactical Forex Trading. One is to my community, fxbootcamp.com. One is to Quant-in-a-Box, which is, I don't know, how do you say it? It's AI sitting on the Google Cloud, pulling in data from private and governmental sources from around the world, taking that economic data, organizing it, comparing it, and then producing outlook. Should the euro dollar go up today? Should it go up this week? Should it go up this month? Should it go up this quarter? Wouldn't you like to know? Well, Quant-in-a-Box tells you that. There's also a link to tradersway.com, a trustworthy, ethical foreign exchange broker that would love the opportunity to earn your loyalty and your respect. So give them an opportunity. Open up a demo account. You're like, wait, I already got a broker. Why would I want to do that? Well, because I recommend tradersway.com. I've seen how they perform in the real world, and I suggest you give them a shot. They're probably better than your current broker. That's my humble opinion. So check them out if you can, tradersway.com. Okay, one of the things I wanted to take a look at. Let me, where did it go? Where do you change? What? Oh, here it is. All right, so over the course of the day, the 10-year T-note dropped all the way down to 4%. It tickled and touched 4%. Is that a big deal, you say? Wayne, what's the big deal with that? Well, let's show 1 month worth of data. And over the last just few weeks, 2 or 3 weeks, the 2-year Treasury went from 5% to 4%. 20% drop. A 20% drop this month. A 20% drop this month. Is that a big deal? Well, yeah, that is a big deal. And so what's happening? People are buying 2-year treasuries. Why? Oh, I don't know. Maybe around that Fed meeting, they interpreted what the Fed told us as you'll never see 5% on a 10-year or on a 2-year note ever again. So people bought it. Remember, if the yield has dropped by 20% in 3 weeks, then prices have risen. Which tells you people bought as much of this 5% 2-year note as they possibly could. Whoa, whoa, whoa! Is that meaningful? Yep. Especially if you attended my second quarter outlook. Oh, check that out. They know. Look, I bought that watch, Vibiliqueen. How do they know? Look at them showing me ads. It's so funny, right? Look at that. These prices are lower now. Only $300 for swimming trunks. They used to be like $600. Maybe they're cheap. They have cheap versions now. Anyways, funny. All right. So that's a big deal is all I'm saying. Okay. Doop, 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 doop. Interesting yield curve, huh? 1 month pays 4%. Wow, just cray. 3 month plays still some of these like 6 months, 5%. So what does this tell you? It's another way of trying to figure out when the market believes interest rates will fall. See, they think interest rates are going to go up, and they think it's going to go up. They think it's going to go up, and then they think maybe down. 1 year from now. And then as we go to 2 years and 3 years, definitely interest rates will be lower. Isn't that interesting? And relative to a year ago, yeah, much higher. So anyways, thank you, Market Watch. Okay, it's another way of looking at quote unquote priced in. Remember, when most people tell you it's priced in, that means they don't know what they're talking about. Okay. Anyways, interesting overnight. Bitcoin went up. That's not surprising. Oil went up. That's not surprising. Okay, S&P 500 is up. That's not surprising. What is surprising is gold didn't go up. Well, WTF? Whiskey Tango Foxtrot. Yeah. So that's a strange one. Okay, that's a strange one. I would have thought that was going to go up. So maybe it's delayed. Huh? Maybe. Swiss franc underperforming. Okay, Swiss franc quite strong in the moment, at least versus yen. Look at some of these things. Kiwi double bottomed on the take profit zone. So this is your setup for trend or counter trend. Okay. Okay. This is a trend play. And the other way of doing this is double bottom, higher high, higher low. And this is a counter trend. You're playing the double bottom as a reversal. So by definition, all reversals are counter trends. Okay. So right now, yen is unusually weak, and one thing that you could do if you're bold and beautiful, like me, if you're bold and beautiful, you get ready to sell this in the near future. That's what this X is about, by the way. My X's and surround me, right? Hang on. So if you are a Quant-in-a-Box subscriber, I want you to focus on that. Let's see if I can zoom in on this. All I want to do, it's not going to do it. Oh! Where'd you go? All right. Just want to show that a little bit more. I guess that's the way to do it. All right, nice. And then I'll move that to the side. All right. So everything here, hang on. All right, so let's do it this way. Mark your grid. Here's your zero line. Wayne, could you actually put it in the right spot, please? Okay, here's your grid. Okay. All right. So the way you look at this is everything over here, I'll mark this in green. Quantitative analysis of economic, comparative quantitative analysis told you that everything that you see in that quadrant would be up today. And it is up. Moderately. It's moderate, but all of that is correct. That's what you would expect the market to do. Now, let's do this in red now. Everything down here, economically speaking, was expected to fall and has fallen, and no big deal. It was predicted and it has happened. No big deal, right? Right. The thing is, if you're going to be ahead of the market, the way that you're looking at this this data, and it's basically, you know, when you break it down like this, it's calculus. So now what you do is you could look at this data and, okay, these things were expected to fall, so that's a negative, but they're up today, so that's a positive. Expected to fall, but they're up today, so when you multiply them, you get a bad outcome, right? A negative number. A negative times a positive is a negative. So all of this was not expected. And you can see very quickly, CAD yen up, pound yen up, Swissy yen up, Aussie yen up, Kiwi yen up. You're like, okay, yens are weak today. But they're not expected to be. When you do quantitative analysis of economic data and then compare it comparatively, you would expect yen to be strong this time of year or soon. But that hasn't happened today. So do you understand that this might, if you're smart, might be tomorrow's sell? These are all out of position. Now, these were expected to go up and they've fallen, so maybe these are, right? See, like gold, for example. I thought gold was going to go up. That's gold. It was expected to go up, so gold is a positive, but it has not. In fact, it's fallen today, so that's a negative. Positive times a negative is a negative, so that's also an outlier. The way to read this is, you're not wrong, it just hasn't happened yet. So this gold might do this in the near future, and you want to be ready for it. So that's how I look at it. Everything here has already happened as expected. Everything over here has already happened as expected, but these might be opportunities to sell, and these might be opportunities to buy later today or tomorrow. So you're thinking ahead. Isn't that beautiful? Like, seriously, oh my God, isn't that beautiful? It's telling you, it's basically grading itself and saying, look, the economic data is not wrong, but these are out of position. So you should check them out. So maybe today or tomorrow or the next day, okay? Today, tomorrow, or the next day, maybe you end up selling CAD yen, selling pound yen, selling Kiwi yen, selling Euro yen, selling, okay, selling. Oh. Okay. Isn't that cool? Now you got a hit list. Loaded like a freight train, lying like you never came, feeling like a spaceman one more time tonight. Now, when it comes to economic analysis, it's right. What we see here is we hit a technical bottom, but things have not fundamentally changed. So what do I have going on here? This is what I did yesterday in the day trading group. Okay. Plan A, plan B. Sell, sell, sell. So we had a big update today. Cool, man. Take it down. Take it down. Take it down. I take it down. I take it down. Or I take it down. I take it down. Now, you don't know which one. That's why you use technical analysis. Technical analysis is fairly easy. Okay? Everything on the right is price. So we already know somewhere around 97.33, which is right now. We did this yesterday. We know somewhere around there we might want to sell. That is the right price to possibly sell. The next one is way up here at 99. If price gets up there, that would be a decent price to sell. Okay, now everything on the bottom is not price, but time. So the next thing is, we're at the right price. When do we sell? When do you pull the trigger? How many people would like to know the answer to that? Jim. Jim already knows, but he's kind. Okay, sure would. All right, cool. Now, once again, I covered this last night. So everybody in the day trading group's chuckling because they're like, dude, we already know. Okay, yeah, 12 hours ago, we already knew this. So anyways, what you could do is say, well, we are at the right price. And by the way, I'll just show you. Look, day trading group 2, right? Look, we were predicting where the 21 EMA would be later today. So we were predicting it 4 hours in advance. That's how we got to the X. Okay, so now we're at the X. Now what? Now you drop into a small time frame. You could use the 15, you could use the 5. It's all a judgment call. Okay? It's all a judgment call. And we did meet, by the way, in the day trading group when we set up this plan. Oops. Okay? We were in sort of this period here. Before that, actually, because we end on the 5 o'clock hour, right? So that's when we met. And the plan was, it's probably going to go way up to 97.30, where we are now. So that was part of the idea. It probably needs to come up here. And then, do you have the strength and fortitude to wait on a 5-minute chart for a 21.55 cross? Huh? Ugh. You have to wait, brother. Okay? And then what? You could either sell or, okay, right? Wait for the 21.55 cross, then sell lower high. So get the cross and then the pullback. Kind of like this. Up here, it crossed, but by the time it crossed, you were already up here. So now you wait for the pullback and then you take this shot. And you're like, well, how do you do that? How do you know when? Do you buy it on the 55? Do you buy it on the 21? How do you know on this 5-minute chart? Well, I answer that in my book. What do you, when you get a fresh 21.55 cross, you wait for the next 5.8 cross up, which is a fancy way of saying by the time this happens, you're out of position. So you wait for the 5.8 to cross down. Wait for it, wait for it. 5.8 cross up. Boom! Long and strong, son. Okay, and that puts you long if you're a bull. And bear in mind, if we were a bear yesterday and we analyzed this and said, well, it's going to go from from 96 to 97.33, I think it was. Then you're predicting a 130 pip move to the upside. So you could take it. You could. Or you wait and do this one and say, okay, if we get to 97.33, which is here, wait for the 21.55 cross. So if is 0.1. 0.2 is then get the 21.55 cross. And 0.3 is sell the lower high. And now you're in business. And how long do you sell this? 12 weeks. Oh, snap! What? Whoa, what? You're saying trade a 21.55 cross on a lousy, no good, stinking 5-minute CAD yen chart? And you want to hold it for 6 to 12 weeks? How could you possibly determine that? Well, do you see the X over here? It's the whole basis of the entire trade. This 5-minute chart is simply the sniper looking through the scope and at the right moment of time squeezing the trigger. There's no strategy behind it. Well, how'd the sniper get there? And who's protecting the sniper? And who's the sniper shooting? All that's strategic, and that was taken care of way before you showed up on your 5-minute chart. So the strategy here is not on a 5-minute chart. It's way out, back on base. This is AWAC, this is satellite imagery. Okay? This is lower high, lower low. Lower high, lower low. So how could you even look that many months out? Seasonality. Okay? Yeah. Oh, it's so beautiful, isn't it? Don't you get tingly sometimes? I do. Okay. So will that happen? Oh, I don't know that. How would I know that? I don't know the future. Okay. I don't know the future, son. But that could get interesting. So that's only plan A. Remember, plan B is way up there. So you might end up doing something today or waiting maybe another week. So in between, you'll have to decide, are you short-term long and long-term short? Or are you just long-term short? Hey, that's a management decision. Are you going to hedge your bond portfolio if you're a bank manager? Nah, why waste money on a hedge? Well, okay. Nice, right? Nice. Would you sell this at 18 and a half? By this, I mean peso. Lo, my love. Oh, my darling, I hunger for your trade and yield, lovely yields. 11%. Thank you, Mexico. May 18th is the next meeting. Maybe we get even more. So I got a little bit of sad news for you. No live stream tomorrow. No live stream on Friday. No live stream on Monday. No live stream on Tuesday. No live stream on Wednesday. But Thursday! Pretty sure there's going to be a live stream. And then Friday's non-farm payrolls. So I'm going to be out of the office for a little bit. And I'm not going to be able to take a laptop with me. I'll just be moving around too much in the next week. So I miss you already. From what I can tell, this is my first vacation in something like 12 years, maybe 10. But it might actually be longer than that. I've had a few like long weekends, but I haven't had like a proper spend a week. I know Europeans are laughing. They're like, "That's a week isn't a vacation." Well, to an American, it's you have to apologize for it. But anyway, so I will not be around for the week. I will be traveling with my beautiful wife and my lovely children. Looking at statues and paintings of naked people with my teenage children. How awesome is that? So anyway, so I'll be gone for a little bit, but I'll be back in time for NFP. Thank you. It's it's a weird feeling, honestly. So anyways, yeah, thank you. So that means if you're in my day trading group, well, I won't be around for that. And the swing trading group, I asked Ryan if he could do Thursday's, I guess tomorrow's swing trading group. I haven't checked my email yet. Not sure. But he may be able to do it. Maybe he won't be able to do it. I don't know if he's available. All that kind of stuff. But if not, okay, then I will see you when I get back. I highly recommend you use the time to go back through all the training videos that you think you already know. Is that right? Interesting. Yeah, interesting. Yeah, I don't think anybody mentioned that in my meeting yesterday. Well, hopefully he's okay. I don't remember getting anything from him saying he'd be out. You know, it's South Africa. Everything's a problem. No, I don't think I have an email from him or a response. Well, then just assume he won't be around. And the interesting thing about the new setup at FX Bootcamp is that when a new, we call them meetups, when we start or the meetups? Yeah, they're meetups, right? When you start a new meetup, it alerts everyone that has registered. That's why you should register. And so if he's able to do it, you should be notified, right? Yeah, King. Yeah, King. It's weird. I like, honestly, most of the time when, you know, like if I was going to Disney, I've done this many, many, many times. I mean, obviously doing these live streams for 20 years, right? I always take you guys with me, right? So I do my live streams, and the kids are used to it. It's happened their whole life, where we might be going to Disney, and you know what happens is they go first. They get ready and everything, and then they go take the boat ride to the main, you know, check-in gate, and they're checking in and everything. Meanwhile, Dad's going over his charts. Dad will meet us a half an hour after the open. Oh, well, we'll meet you at the train station. Okay. And, you know, Dad rolls in 45 minutes after, you know, and it's just normal because Dad wakes up in the morning and he goes over his charts, right? So anyways, but in this case, I'm not going to be able to. Just too much moving around. So. But I'll come back smarter and happier, maybe, right? Okay, so yeah, up. All of that makes sense. S&P 500 hasn't gone up much, but remember, it's not actually open yet relative to the UK having an up day and so on and so forth. Australia having an up day. And remember, much of this we've already spoken about. Once again, if you've attended the quarterly outlook at Quant-in-a-Box, I've already made all these suggestions, and I've already explained why this might be occurring. Made it. No, I'm not going back to Cuba. No. Once again, I'm going to go to a place where there's lots of statues and paintings of naked people. And I get to share that experience with my teenage children. Okay, so anyways, so yeah, I've explained all of this fundamentally why these things might be going up for now. So make sure you maybe watch that video. Now it will delete itself in what, 5 days? So anyways, yeah, I've had some fun with the experience, right? I've had the fun experience where I've done things like it's such a great experience for the kids because remember, they're young and in their prime years, you know, we had COVID, so you couldn't travel and stuff like that. And so I'm having some fun with this. I want them to really experience different things. So like when we land in the country we're going to, I got to get us onto a train and we got to go somewhere else. But and it's, and so we get on the train and it's a private cabin, executive cabin, right? And that kind of stuff. And it's private. Well, a few days later, we're on another train. No private cabin. Nope. Only VIP. And then a few days later, we get on another train. Oh, only business class. And by the time we get on their last train, only premium. Like it gets lower and lower class, that kind of stuff. I'm like, yep. And then, like it's just should be fun. Like then all of a sudden you're like, damn, this premium class sucks relative to the private car where they're bringing you menus and, serving you gnocchi for lunch, right? And it just all of a sudden you're like, be grateful for what you got. Like, look at these seats. They don't even have TVs. This sucks. How do you travel without a TV? Right. Anyways, they're not like that. But anyways, but that idea. So, all that kind of stuff. It's going to be so much fun. So I'm looking forward to it. Time to be a good dad and a good husband. So anyways, I'll miss you guys. Take a quick look at cryptos. Bitcoin up, which we had going. Ethereum still hanging around, not really doing its thing, but really not doing its thing. Okay, a little profit taking on Ripple. Solarium going nowhere fast. And then we got to be careful here. Now we're at the top. And I think I still own some of this, but I might have paid $2 for it. Like, I don't remember paying 30 cents for it, but I might have paid $2 for it. So go. Yeah, I bought it at that time when the FBI claimed, sure, I went to 3. I bought it at the time when the U.S. government claimed when a company that just happened to be here in Georgia was hacked. And the company had to pay like $100 million to the hackers to get their servers back. And the FBI, like a month later, said they were able to hack the hackers and get like 40 million of the Bitcoin back because they had to pay Bitcoin. And I'm like, well, this ADA, the way it's designed is there's this anonymity on the blockchain built into the technicals of how this works. So it's like if they could figure it out in Bitcoin, they wouldn't be able to figure it here. And I thought, boom, right then and there, hackers are never going to ask for Bitcoin ever again if the FBI could actually trace it back to you. All of a sudden, you're like, whoa. You don't want that. So all of a sudden, I'm like, oh, okay, hackers are going to start demanding ADA okay. And then that's probably why these things skyrocketed from 24 to 240 back down to 24 in the crypto winter. But maybe there's still truth to that narrative, huh? Isn't that amazing? From 24 to 240 back to 24. Is that 90% drop? Oy vey. Okay, so anyway, so I own this one at $2. And I plan on holding it forever. That's that. Right. So are you going to sell these or not? I don't know what you're going to do. Okay. Maybe at 164. Okay. That's the monthly sell. Here's the weekly sell. Right? Shields up. Red alert. So if you were a bear, if you got a problem, I'll solve it. Okay. On a 15 or maybe a 5er, what are you going to do? 21.55 cross down, followed by the next 5-8 cross down. But remember, when you get the 21.55 cross down, the 5-8 will already be crossed down. So then you have to wait for a 5-8 cross up and then wait for the next 5-8 cross down, which is a fancy way of saying so. Okay. Which is almost the same as selling right now because you got the right price. But see, now you have no timing. You're just selling blindly at a price. So what's the difference? Okay. What's the difference between this trade? Well, let's say you expected a minimum of 300 pips on this trade. Now, if you don't expect 300 pips on a trade, I need to teach you how to trade better. Some people just can't even fathom that. 300, that's impossible. Okay. So right now we're talking to the difference here is 25 pips if you want the real answer. Okay. And if you were expecting 300 plus, 25 pips is not even a rounding error, right? Who cares? The difference though is if you take this trade, yes, you give up 25 pips for being conservative, but you're accepting, let's say, 50% less risk. On a 300 pip trade, that's cheap insurance. Capiche? Now, if you only make 25 pips on a trade, then you're like, oh my God. Yeah, well then, yeah, that's the problem. Your trades are worth less. Maybe not worthless, but worth less than what you should be doing. And if your trades are only worth somewhere between 25 and 100 pips, it's because you don't know what's going on. So therefore, my trades might be worth more because I'm looking at the 5-year and 20-year averages of what happens in the next 90 days regarding just this Japanese yen. I have 20 years of data in my mind. I have 20 years of data, and you might have 2 hours worth of data, and I have 20 years. And so maybe, right, if I'm correct, if I could take that information and make it useful today, knowing that, let's say this is the case, that Japanese yen could fall 1,000 pips in the next 3 to 6 months. Then, right, can you imagine if I'm like, look, over the 20 years of data, I could foresee in these market conditions the pound yen dropping 1,000 pips or more in the next 90 to 180 days. Then why would you go after 25 pips? If most of the work is waiting for the setup and actually selling it, then you drop a stop. But why ever get out then? If 95% of the work is waiting for the setup and then pulling the trigger here, then after that, it takes no work. Once you move this stop to break even, let's say, which might be 24 hours later, you move it to break even, you're up 75 pips profit. And now you let it run for 90 days. And you're like, 300? I'm thinking a lot more than that. And here's the thing. What's the difference? Work-wise, there's no difference. It takes you no extra effort to let it run. That's the whole point of Quant-in-a-Box. If you attended that hour-and-a-half presentation, it's designed to help you know when to let it run. Because once you've entered the trade, the amount of work to make 25 pips is the same amount of work to make 1,000 pips. Okay? So one question here is, will the current Bank of Japan monetary policy affect the move? Well, we now have the central banker in charge of the Bank of Japan retiring. Literally like right now. And in the next few weeks, we will learn about the new Bank of Japan. And the potential for a new policy at the Bank of Japan to be different. Let's say the new guy comes in, the new team comes into the Bank of Japan, and just because they're new, they have to say, well, we need to improve what the old Bank of Japan was doing because we're new and we're younger and we're smarter and we have better ideas. So we can't just do what the old BOJ did. We're the new BOJ. So I think there's this like potential that they do something different. Well, if you look at, let's say, analyze the last couple of years of Bank of Japan policy, okay, the Bank of Japan policy had this pair going this way, by and large. Okay, cool. Now what? Well, what if this, look at the lines I just drew, by the way. Can you see it? I just drew these just 20 minutes ago, 10 minutes ago. What if the new policy is this? Okay, this is where we are right this second. We're right here, right now. Oops, I wanted that in black. Come on now. We're right here, right now. Is that a 50% retracement? Yeah, maybe. But the thing is, it's not technical what I'm talking about. That is now, and April is the new Bank of Japan. And if maybe it's the next month, maybe it's the next 3 months, maybe it's the next year. We don't know when. That's why I use technical analysis. But if you think the new Bank of Japan could reverse this scenario of weak Japanese yen into something that becomes, let's say, at least more stabilized. Well, stabilized, you would say, well, maybe if we look at this as a price, this is a price, this is a price, this is a price. Okay, at least to here. But that's 155. We're at basically, we're at 164. It's 900 pips, bro. 900 pips to the conservative bottom. 900 pips back to the 200 EMA. But it could be here 12 months from now. Thousands and thousands. So here's what I'm trying to say. Why would you piss around going after a 25 pip trade? Well, the answer to that is because you don't know. You don't know any of this. You're like, oh, well, my MACD told me on my 8-minute chart. My MACD told me. Okay, well, go ahead, work. Take the same amount of work your butt off, make your 30 pips. I might take the same trade at the same time, doing the same amount of work, but I'm going to let it run for 9 months. And you'll have to make you'll need to make 100 profitable trades, more than all your losing trades. So you'll probably have to make 400 trades, of which 300 of them are mostly profitable, to catch up with my one trade. Okay? You see what I mean? I don't know. Cool. So that's how the Wayne do. You want to pick on things you want to sell. Like, I probably wouldn't do a move like that on euro, because I think there's potentially some bullishness in euro because the ECB is going to continue raising interest rates. And now at a rate faster than the Fed. So the Fed might raise 25 basis points, but the ECB might raise 50 basis points. And even though the absolute rates are higher in the United States, the rate of change is faster in Europe, and you might have a euro dollar long, but I wouldn't therefore then sell euro yen, because I think people would be selling buying euro dollar. So all of a sudden, ooh. So now I got to go find, okay, so I don't want to pick on euro. So I want to find something else. Okay? Now, how do you find the other things? Well, you look at technical analysis, but also, again, here's a plug. For $79 a month, you would know what moves best this time of year based on the normal ebb and flow of capital around the world, aka seasonality. You'd be able to go through every single pair. Dollar pairs, yen pairs, cross pairs. Well, actually, 79 is the monthly, right? The retail one. So you wouldn't have cross pairs. But you'd have all the dollar pairs and all the yen pairs, and you'd know which ones perform best usually this time of year. And you would know the difference between a CAD yen, a euro yen, a pound yen, an Aussie yen, a Kiwi yen. And I have that in my mind, actually. So I know which ones I would consider selling and which ones I'd be neutral on, because I think, yeah, the yen might be strong, but I think the other currency on the other side of that yen trade would also be strong, therefore neutral, but then other ones underperform, and boom, 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 I take those ones down. Or you just trade what you always trade for whatever blind reason. As I say in that Quant-in-a-Box presentation, right? Trading random currency pairs for random reasons at random times of the year. What kind of outcome do you expect? Consistent? No, you could never be consistent. You could never be consistent if all your variables are random. How could you possibly get a consistent outcome? It's impossible. Okay? It's like a 12-sided die, and you roll it, and you get the same number 10 times in a row. It's not likely. Oh yeah, Brian. Yeah. You caught up. That's pretty funny. That's cool that you can do that, by the way. Ooh, I used to watch recordings of my Harvard classes at twice the speed. So you attend it live and not take notes. Then you watch the recording and take notes. And then you go through the slide deck and take bullet points of the bullet points. And then you regroup. And then you ask yourself, when you have done all that, then you go to the homework. And while you're answering the questions, you're like, what, by analyzing the questions, not just answering the questions, by analyzing the questions, you're like, why did the professor give this kind of homework? What's the intention? What is he trying to teach? through application. That's what homework is, right? Applying what you just learned. And what would that indicate that would be on the midterm exam? What's the point of this question? And then you start every week that you're doing homework, you're asking yourself, how will this lead to a question on the midterm or the final exam? And that's how you become an A student. The question tells you, right? So anyways, yeah, so I like the idea of watching at twice the speed. Love it, man. Love it. Okay. Now, Diddy says, I will do it. I will not exit early. I will not miss this opportunity. Well, do your technical analysis. So don't commit to be committed. Okay? Remember what I teach. Strong opinion. So you are clear. I just crushed this, right? I made it so clear what my intention is. So, strong conviction. No, a strong opinion. You know what the opinion is, and I backed it up with lots of facts and lots of passion and all that. But weak conviction. If I'm wrong, I need to be wrong quick. Right? Strong opinion, weak conviction. If I'm wrong, I will not be stubborn about it. I have no emotion tied to being wrong or being right. When hedge funds blow up their accounts, it's not that they're wrong, it's that they're not willing to admit they're wrong. So they keep doing the same thing because they know they are right. So they sell some more. Oh, it's dollar cost averaging. Oh, that didn't work. Oh, we'll sell some more. There'll be a mean reversion soon. It can't go past 1 standard deviation. It can't go past 2 standard deviations. It can't go past 3 standard deviations. And all of a sudden, you're out of business. So you always have to have that in the back of your mind. You cannot be tied to your own narrative. This is why I preach that I don't care about your winning percentile. What percentage of your trades are profitable? And you come to me and you're like, Wayne, over 90% of my trades are winners. And I'm like, you are a loser. And you're like, what? I'm like, you don't know how to take a loss. And you have this emotional attachment to how right you are. You're 1 day away from bankruptcy. Okay? Because you would rather blow up your trading account than be wrong. And I would never invest to somebody that, because I've seen thousands of traders that brag at high winning percentages, and then you look at their losers. So their average winner is 30 pips because they got to get out with a winner. They also do things like when the trade fails, so they're up 100 pips. So what they do is they get out for +3. +3. 3 pips. And they're like, that's a winner. Winner, winner, chicken dinner. I'm like, dude, 3 pips. You risked, let's say they're investing my money. You risked my money. Let's say on a standard lot, you risked $1,000 and you made $30 and you call it a winner. I don't like that at all. What are you talking about? I'd rather count it as a loser. Oh no, but my winning percentage. It's a lie. You cannot call a 0.03% return a winner. Okay? You got to mark it down as a loser. Now, it's not a big loser, so it's okay, but to call it a winner is outrageous. Oh, Wayne, I'm a winner 90% of the time. Well, 90% of the time, your winners are not worth very much. And then you look at the losers. Oh my God, one loser is worth 30 winners. You're like, wait, your average winner is what, 22 pips, 28 pips, 33 pips, whatever it is, but your average loser is 300? I'm not interested. You just need one unlucky bad streak and you're out. It's like Silicon Valley Bank. They had billions of dollars of risk-free investments. And in one day they went out of business. Well, they had 1,000 days in a row of profitability, and one day they're out of business because they had to sell short. Anyways, so I don't care. So strong opinion, and the strong opinion comes from your research. You have done hardcore analysis of factual data, and you know exactly what you intend to do and why. You are more informed than the 95% of Forex traders that lose money. Maybe that's why you're a success. And you feel good about it. And you feel confident about it. Shoot, you've done more work. You deserve to be right. You know you're right. That's why you have the strength to let it run. But you also have the strength to get out if you're wrong. And you don't have any emotions tied to being wrong. You're like, oh crap, what the hell's going on here? Okay, take me out for a loss. Take me out, coach. And then you wait for the next setup. What's the big deal? Oh my God, you took a 70 pip loss. Yeah, well, who cares? Your winners are 300, right? Like, it failed. It failed. And you're going to have a lot of break-even trades. And by break-even, I mean -3, -4. So on average, if your average loss is 70, but you got a whole bunch of -3s, then it turns out your absolute average loss is probably only 22 pips, 28 pips, 30 pips. And your average winner is 300. Oh my God, you have a 10-to-1 upside risk-reward ratio? Yeah, boy! Okay? It's just, right? It really helps to know what you're doing. And I'm trying to share that with you every single day. The numbers have to make sense. Your mind has to be right. And I hope you are learning these things. So, strong opinion, weak conviction. You can always regroup and try again. So, while I'm gone, maybe watch the training videos at FX Bootcamp. Maybe read The Art of War. Because some of these ideas are in the art of war. Instead of managing your money, manage your troops. There are honorable victories and there are dishonorable victories. That was an interesting concept in the art of war. Victory isn't necessarily good. You can win in very bad ways, dishonorable ways. Everything has to be aligned up. The heaven, the earth, the gods, and the ancestors. And if you end up killing 1,000 of your own men to destroy an enemy of 100 people, you're dishonorable. Or if you take 1,000 of your men and attack an enemy of 10,000 soldiers, that's also dishonorable. You're going to get slaughtered. And for what? But we're not talking about soldiers here. We're talking about money. but you only have so much money. There are honorable victories and dishonorable victories. And that's why I say when you're at certain levels of, when you're above the pivot zones, those are dirty pips. Those are filthy pips. Those are high risk, low reward pips. Counter trend trading, high risk, low reward. They're dirty, they're filthy, they're dishonorable. You made money, but you dishonored your risk management. It's dishonorable behavior. Wayne, I'm patient, I'm disciplined, but I jump in late, I counter trend trade, and I do this, yip, 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 and 95% of my trades are winners. Right? Look, Wayne, I make money. But my losses, when I take a loss, are 10 times bigger than my winners. I'm like, good, you're profitable, good for you. I'm not interested, pass. I can tell you there are many, 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 many traders that trade in dishonorable ways, in my humble opinion, but are profitable. Good, you're profitable. Fantastic. Not interested. Pass. But Wayne, I got a high winning percentage. Good for you. Awesome. Keep it going. Not interested. Okay? So, from the bottom of my heart, thank you for being part of this community that we have on YouTube. I appreciate you. I know this is a hard gig. My intention isn't to make it look easy. My intention is for you to break it down and simplify it. Okay? Again, I'm not trying to make this come across that trading Forex should be easy, and you're like, damn, it's easy when he does it, but then when I'm on my own, it's so difficult. I'm not trying to have it come across like what we do is easy. But I am trying to preach to make for you to simplify what we do. There are just too many variables for you to incorporate everything. So you need to learn how to simplify. It's a strategy I learned as a venture capitalist where when I looked at really cool stuff that was too complicated to manufacture, too complicated to assemble, too complicated to use, too complicated in general, I learned to pass on all those investments. Cool thing, cool project, cool idea. It's really awesome. Not interested. Because complications break. Complications get misused. Bad things happen. Look at your trading. You might be trying to look at all data on all time frames. You're trying to use all the different techniques. You're trying to use every indicator, and you just get caught in the quagmire. Find a couple of things that you like and just do that. Price action pivot points is where I would start if I were me. Okay, keep it simple. And there's only two parts to every trade: long-term, short-term. Strategy, tactics. And so like I did on this CAD yen, the current trade that we set up yesterday is if, because remember yesterday we were way down here. So now it's like if we get to this price, I wait. So now I'm actively waiting based on what I see on this chart. That's it. I'm actively doing nothing. I'm not ignoring it. I'm actively waiting. Strategy is now done. You're like, that's too simple. Why are you selling there? Daily 21, monthly central pivot point for April. You're like, that's it? Yeah, that's it. Then why not sell now? Oh, it's the right price for that to occur, but it's not the right time. So strategy is done. I'm done. That's it. That's simple enough. Cool. So now what? How do you tactically, when do you sell? Well, I drop into a 5-minute. And do you remember? Step 1 is get to that price. So we're about that price. Step 2, 21. Cool. So now I'm actively waiting. So now we can synchronize our watches, huh? Biddy-doo, biddy-doo, boop, boop, boop. Right? Roger that. Sell on the 21.55 cross. In 3, 2, 1, click. Now you're in. On the 21.55 cross. Gorgeous. Or you can even take it further. After the 21.55 cross, you wait for the next 5-8 cross down. So you got to wait for a 5-8 cross up and then the 5-8 cross down. Oh my God. Yeah, but that just tells you low or high. Now, what if the next 5-8 cross down is higher than the 21.55? You're not in it, son. You don't trade not lower highs. So anyways, that's it, guys. Simplify. Simplify. It's not easy, but you got to simplify. You got to have strategy. You have to have tactics. All around a bias. And with that, you will have clarity. Clarity of intent. And that will relieve stress. It will set you free. So peace on earth. May the pips be with you. May your profits be above average. I'll see you in a week. Miss you already.